everybody. I'm Amy Bernstein with Bernstein Realty. I'm very merry because it's right around the holiday season. Thank you for joining in on our podcast. I am super excited today to have Cori share with the Amegy Bank with me today because absolutely she is all things in the lending world. Well, she's all things and more, but in my world, she's all things in the lending world, and she is unbelievably talented at what she does. And I just can't wait for her to share some of her knowledge with you today. So welcome, Cori, and thank you for being here.
Thanks for having me.
Thank you for getting some very, very, not difficult, but I would say complicated, intense loans based on the way customers of mine were paid this last month, it seems like, through. So thank you very much.
Yeah, thank you. I mean, I think we've talked about this. There's certain deals that they're not necessarily complex, but when we get into the mortgage space, things maybe don't fit into a cookie cutter mold.
Yes.
And that's where we have to kind of come in and shape it so that we can
And you shaped it and molded the loan and made it so that you could go sell it to underwriting.
Yep.
And it was great. And both my buyers
worked
are
out.
So happy. So thank you
you
very much. So let's talk about kind of what's new and hot in the mortgage industry today. I think probably the hottest topic in my world is the increased loan limits. Let me just date me a little bit and show how young
I get
you
it.
are, okay? So when I first got in the industry 44 years ago, how old are you today, Cori?
33. I'll be 34. So.
That makes me feel really good. But anyway, so when I first got in the business, I think conventional loan limits were $230,000. So today they've been raised to how much?
$832,750.
That is insane.
But let me date myself too, because it's not even an age thing. I think this just shows how much inflation we're experiencing. When I first started, 7-8 years ago, it was in the low 400s. So we have since doubled that in 7 years, where you've been in this 44 years.
Yes.
And yours, we doubled when I started.
That's amazing.
So to have it increase this much this quickly shows you how quickly homes are appreciating, the value of the dollar. I mean, there's a lot that goes into it.
So tell the viewers what a conventional loan limit is and what it means to them.
Yeah, so there's different types of loans. 9 times out of 10, if you're a first-time home buyer, you're going to be in a conventional loan or an FHA loan. If you have military service, maybe a VA. Those are kind of our 3 main buckets. Conventional loan has higher loan limits than FHA. Most sellers are going to accept conventional financing, pretty much all areas. It allows you to purchase a higher priced home as a first-time buyer or a second-time home buyer. Conventional loans do allow for as low as 3% down if you are a first-time home buyer.
Wow, that's great.
So so now you can purchase a home in the high 800,000s with 3% down.
That's pretty amazing.
And still be in a conventional loan.
So many buyers today think they have to put a large bucket of money down, and they really don't have to do that today.
No.
What do you say to the consumer? This drives me crazy. My first home, my loan was at 16 7/8, okay? So when I hear people say when their interest rates are in the 6s, which now they're in the 5s, right?
Mm-hmm. Yeah,
so when I hear people say, "Oh, these rates are so high," that's because they have in the memory what was recently in the last 5 years, COVID times, of rates 2.5% and 3%. What do you tell people when they say interest rates are high?
You know, high is relative, I think, in any capacity when we use that word. I think it's pretty stable right now. And when we see that rates have been stable for a few months or even over a period of a year, that's a good thing. It's not a good thing when we have a super volatile market where they're up and down and we're racing to lock a rate. And the reality is, and what I like to really show people when they're concerned about their payment or their interest rate, like you said, the interest rate usually isn't the make or break of someone qualifying. What usually is the make or break is going to be our debt to income or the property taxes and the HOA. So those are the things that we're looking for when you guys are out looking at homes with your agent. If you're switching up areas and you're going from in Houston, let's say a 2.3 tax rate to a 3.2 in the suburbs, that's going to skyrocket your payment. Whereas if rates go from, let's say, 5.875 to 6%, it's really not that big of a difference. So putting so much emphasis on our interest rate, it's not as impactful usually as people think it is.
And so what I love is I've read, I'm a big reader when I can't sleep at night, I'm either on Instagram, not going to lie, or I read real estate articles, or both. So one of the things I thought was interesting is they say, don't marry the rate, marry the home, right? So find something that you really love. Don't be as focused on the rate, because refinance is always something that can be in the future for many buyers. You want to talk a little bit about how refinance works?
Yeah, and another important thing that I always tell my clients is we can get you any rate you want. So we have a rate sheet, and every rate is associated with either a lender credit or a fee. So depending on what works for you guys and what your financial situation entails, your goals, we can get you any rate you want, right?
You just got to pay for it.
You might have to pay for it. And we can kind of see what the math looks like on that. But refinancing is always a great option if it makes sense for you. Very quick for me to run the numbers and see if it makes sense. Usually we like to recommend about 1 full percentage of interest rate savings with no added fees. And when you start to make a dent in the principal balance, usually that's going to be after about 1.5 to 2 years.
Gotcha.
Refinancing, you can roll those closing costs into the principal as long as, it makes sense in our ratios.
And so what does that do? That makes you come up with less money, right?
Yeah, I mean, cash to close for a refinance can be $0. You can even get money back if we're doing a cash out. Typically, the only fee up front that's required is the appraisal, if an appraisal is required.
Nice. And so tell us a little bit about all the new loan products. So I know you recently joined Amegy. What a great move you made.
It was.
I mean, really great move. I mean, to have Amegy is great. Now to have Cori Share and Amegy is like the home run
Dynamic
of it all,
duo.
Right? The dynamic duo. So tell us a little, what a solid bank, and they just have a great reputation and they perform. Tell us a little bit about all the different loan products that Amegy has that you're excited to be able to offer your customers. Our customers and your customers.
I think the main one to kind of go with what we're chatting about today is we do have a 3% down, no mortgage insurance product, and that's through our CRA program. So for this particular program, it's not a government loan. It's actually a regular conventional loan. Most of the time, these programs are income-based. This one is not. So as long as either the borrower or the home qualifies as CRA, which just means it has to be in a low to moderate income area, and we look that up on the census. You can look it up online. You guys can look up homes and see if the one you're looking at qualifies. As long as one of the two qualify, they can take advantage of this program. You do not have to be a first-time buyer as well.
So for the consumers, mortgage insurance is anytime you put less than 20% down on your home, the mortgage company requires you to carry mortgage insurance at your expense, the buyer's expense, but for their protection in the event you default. So what Cori, you're saying is that you have products that have only 3% down, but they don't have to pay the mortgage insurance.
Correct.
That's absolutely fantastic.
Yeah, it's lender paid, and we do not price that into the rate because it's a CRA product and we want to participate in the CRA space.
So I know ARMs are pretty important today, and the benefit of ARMs, which stands for adjustable rate mortgage, I know I had several clients this year that did an ARM. Tell me who the consumer is that looks for an ARM.
Yeah, that's a good question. So most of the time we find ARMs being more favorable in the jumbo loan space. It just depends on
and jumbo meaning over the 832,
correct,
750
correct,
new loan limit.
Correct. And the reason for that is the way rate sheets are usually priced out. It kind of depends. I mean, it can change day to day. Sometimes we do see what's called a SOFR ARM in the conventional loan limits with great pricing. Usually we see the better pricing in the jumbo space. The reason for that and why it's beneficial to a client looking at a higher priced home in the jumbo arena is because the rate is so different from what a 30 fixed rate would be. The 30 fixed is the most expensive mortgage you can possibly have. So when we get into the ARMs, you're typically looking at around a full percentage in savings. And when we're looking at loan amounts of 900,000 plus, 2 million, 2.5 million, it's a lot of money. It impacts it more than it would in the lower loan amounts.
So why is the 30-year loan the most expensive? Because it's most conservative,
It's safe, it's risk adverse, but the fact of the matter is, and you can probably attest to this, you're probably not going to have the same loan for 30 years. You're just not. You're either going to sell, you might refinance, you might rent the home out. So many things can change in your life to where you're going to make a change either to your home or to your mortgage. So paying for the security of a 30 fixed loan, it's usually not practical for
So
people.
if I sell a home today and they get a 30-year loan, I'll be 95 by the time they pay it off.
Exactly. And
I hope they list it with me when they do that.
And they're probably not going to pay off that same loan. It's going to change.
I got it. So a lot of my customers this year did a 10-year ARM. And what I like about that 10-year ARM is that you're fixed for 10 years.
Correct.
So chances of most of these people being in that home in 10 years and they're paying an amount on the 10-year ARM less every month than they would on the 30-year, and they're not going to be in that home for longer than 10 years. At least from my standpoint, I hope they're not. They got to move every at least 10 years.
Right.
Keep us going in business, you know?
Exactly. And I mean, and the idea is that they refinance before the end of that 10th year.
Yes.
And a lot of these clients, you were asking who it might be a good fit for. Maybe they're getting an annual bonus. It's usually someone who their goal is probably to pay off that mortgage. Maybe they are intending to stay for a while, or they just want to pay less interest for the beginning of that loan, and that's a great way to do it.
Gotcha. So as the new year is coming, we know that there's a lot of people that are saying, you know what, I'm going to start shopping for a home after the new year. That's my goal, is to buy a home in 2026 and to move. I know I have several people that are ready in the starting gate in January, which I'm super excited about. What would you tell them as they're preparing to get a mortgage? What sort of things can they do right now? Definitely not go out and buy a new car, or definitely not go out and buy a whole new house furniture.
Yeah, and the reason for that is because it's going to add on to your debt to income. So when people tell you things like that, don't go finance a new car, a new house, don't go co-sign for someone, because now that debt is now your debt. It's co-signing, but it's actually your own.
Good point.
Save your money, make sure that your credit is in good standing. Make your payments on time, even if it's just the minimum due. That's a big one. Don't miss a payment. That's a huge thing for your credit score. Save your money, make your payments on time, and get in touch with the right team.
Exactly.
That's what I would say.
The right realtor, the right mortgage person who can guide you every step of the way. Cori, this has been great. I think what we'll do after the first of the year is we'll come back and talk about some other different loan products for the consumers. But for now, I hope you guys all have a wonderful holiday season. Happy Hanukkah, Merry Christmas. And remember, when buying or selling a new home, please remember your home is
our expertise.
Thank you for watching.